Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Ford stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 48 billion market cap. They're trading at $12 a share and they have 4 billion shares outstanding. This company was founded by Henry Ford in 1903, over 120 years ago. They sell a lot of inexpensive cars under the Ford brand. Luxury cars are sold under the Lincoln brand. They also own 1/3 of China's Jingling Motors. They own parts of other non-US companies. The Taiwan Ford Lioho, the Thailand Auto Alliance Company, and the Turkish Ford Otosan. They are the second largest US-based automaker behind GM, and the sixth largest in the world behind Toyota, Volkswagen, Hyundai, Stellantis, and GM. Let's take a look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They had a lot of free cash flow in 2020, 18.5 billion. 2021 it was cut in half to 9.6 billion. Then a negative in 2022, but back to positive in 2023, 6.7 billion. So their numbers are all over the place. Net income is the profit or loss on the income statement. It's revenue minus expenses. That's negative in 2020 and 2022. A big positive in 2021, a small positive in 2023. Revenue is a sales for the company, and that goes up a lot each year from 127 billion to 176 billion. They grew 16% in 2022, 11% in 2023. We estimated 4 years of future free cash flows. We also estimated the terminal value, which is all cash flows past year 4, that's 89 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $78 billion. We divide that by 4 billion shares. And we get a calculated stock price of $19.51. They're trading at 12, so they're trading at a 38% discount. It's a buy according to the model. I did a video on this company back in January 2021. They were trading at $8.65. My valuation is 14. I really wish I bought the stock back then because it was really undervalued. There are 35 companies in the same industry as Ford, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend a lot on capex, over 8 billion. Toyota spends the most at 15.5 billion. Capex is the investments in property, plant, and equipment. They're really leveraged, 3.5 debt to equity ratio. For every dollar of equity, they have $3.50 of debt. They pay a really high dividend, close to 5%. Stellantis pays the most at 5.6%. They generate lots of free cash flow, 6.7 billion. Stellantis the most at 15.4 billion. Ford generates more free cash flow than Tesla. They rank 7th in market cap, behind GM, ahead of Li Auto. They have a good price to book. It's equal to the median. They're trading at 11 times earnings, which is between the median and average. Stellantis is the best at 4. They're trading at 7 times free cash flow. That's a really good number. And look at their price to sales, 0.3. Unbelievable. That's a really good price to sales ratio. They generate a ton of revenue, a lot more than Tesla, a little more than GM. But their 5-year annual revenue growth rate is only 2%. Tesla is high at 35%. If you put $10,000 into this company 10 years ago, you'd have $13,000 today. That's only a 3% annual return. But at one point in 2021, you would have been at $22,000. But you still get your dividend, your quarterly dividend, which is a nice feature. A big reason people invest in this stock. Let's go through the company's 10K. We'll start with their income statement. This shows us the past 3 years. Revenue for 2021, 136 billion, 2022, 158 billion, 2023, 176 billion. And they break down the revenue by Ford Credit, 10 billion, and all other revenue, 166 billion. Here's a further breakdown of the revenue. Of the 176 billion, vehicle parts and accessories, 161 billion. Used vehicles, 1.9 billion. Services and other revenue, 2.9 billion. Leasing income, 4.3 billion. Financing income, 6 billion. Insurance, only 100 million. Here's a breakdown of their revenue by location. 117 billion US, 13 billion Canada, UK 9 billion, Mexico 3 billion, all other countries 34 billion. Their revenue went up a lot in the US, 87 billion to 117 billion. It also went up in every other category. Mexico doubled from 1.4 billion to 2.8 billion. But the other countries, the growth was a little less. Let's go back to the income statement. Cost of revenue, 151 billion. These are all the expenses directly tied to generating revenue, like the cost of the vehicles, payroll, all the expenses to make the cars. Selling and administrative expenses, 11 billion. Ford credit interest and other expenses, 9.5 billion. Operating income, 5.5 billion. That's down from 6.3 billion. Expenses are going up. Interest expense, the interest they pay in their debt, 1.3 billion. Net income, 4.3 billion. They had a loss last year of 2 billion. 2 years ago, they had a gain of 18 billion. That was due to this other gain. The gain on other was 14.7 billion. Their earnings per share is 109, up from last year of a loss of 49 cents. Their shares outstanding are pretty flat, around 4 billion. Let's look at their balance sheet. 121 billion of current assets, 101 billion of current liabilities, so they have a good current ratio above 1. Lots of cash and marketable securities, 40 billion. Ford credit receivables, how much money people owe them when they sell cars, that's 46 billion. Other receivables, 15 billion. Inventory, 15 billion. Total assets, 270 billion, up from 256 billion. Liabilities, 230 billion. The biggest liability is Ford credit, 80 billion. Here's a breakdown of the 80 billion. 18.7 billion of short-term debt, 12 billion of unsecured debt, 18.9 billion of asset-backed debt. Asset-backed debt is debt backed by an asset. The vehicles are the asset. So debt due within 1 year, 49 billion. Debt due beyond 1 year is 80 billion. 45 billion of unsecured, 36 billion of secured. Last year, the interest rate they paid on the debt was 3.6%. Rates are going up, so it's 4.7% this year. Still a pretty low interest rate. Assets minus liabilities equals equity. They have 43 billion of equity. They raised 23 billion from selling their business. They profited 31 billion from running their business. Treasury stock, that's when a company buys back its own stock. That's 2.4 billion. Let's take a look at their statement of cash flows. Their operating cash flow is 15 billion. Double last year of 7 billion, but it's lower than 2 years ago. It was close to 16 billion 2 years ago. Let's look at their investing section. There's a lot going on. They spent 8 billion in capital spending. These are investments in property, plant, and equipment. Acquisition of finance receivables, 55 billion. And they received 45 billion from collections of receivables. These dollar amounts are from when people lease cars from them. They spent 2.7 billion from equity method investments. These are investments in other companies. In their financing section, they spent 5 billion in dividends, 335 million from buying stock. They added 52 billion of debt, paid down 42 billion of debt. Let's look at the company on Simply Wall Street. Its last price, 12 bucks, 48 billion market cap, down 2% in the past week, up 1% in the past year. Let's see what they say about the company. Ford develops, delivers, and services a range of Ford trucks, commercial cars and vans, SUVs, Lincoln luxury vehicles. It operates through Ford Blue, Ford Model E, and Ford Pro, Ford Next, and Ford Credit segments. They sell Ford and Lincoln vehicles, service parts, and accessories through distributors and dealers, as well as through dealerships to commercial fleet customers, daily rental companies, and the government. They engage in vehicle-related financing and leasing activities to and through automotive dealers. They also provide retail installment sale contracts for new and used vehicles and direct finance leasing for new vehicles to retail and commercial customers, such as leasing companies, government entities, daily rental companies, and fleet customers. It offers wholesale loans to dealers to finance the purchase of vehicles for inventory and loans to dealers to finance working capital and enhance dealership facilities. They purchase dealership real estate and other dealer vehicle programs. They were incorporated in 1903, headquartered in Dearborn, Michigan. Here's the stock price since 1990. It's pretty much where it is back in 1990. It was over 30 bucks, its highest in 99. It fell below $2 during the Great Recession in 2009. It got close to $20 in 2011. And I remember at the COVID bottom, I wanted to pick up the stock. It was below $5, and I kicked myself every day for not doing it. Because I remember it ran up to over 20. I would have made a huge return, but I probably wouldn't have sold it. Simply Wall Street's price is 16. They say the stock is 24% undervalued. 23 analysts priced this stock at $14. They say it's slightly undervalued. Their revenue forecast for 2026 is $185 billion. Their free cash flow forecast for 2026 is $6.6 billion. A big thing that scares investors is they have so much debt. It peaked in 2020 at $175 billion, still pretty high at $148 billion. And you can see here their debt is always a lot higher than their equity. Their debt is 3.5 times their equity. This green line is their cash. They have $28 billion of cash, so enough to service the debt. Their dividend in 2014 was over 3%. Its highest was 7.5% in 2018. They cut their dividend entirely in 2020. They did bring it back. The yield is pretty high currently, around 5%. The CEO's salary went from $1 million in 2017 to $1.7 million currently. One big insider buy in the past year, one small sell. 59% of the company is held by institutions, 39% by the general public, and 1.3% by insiders. Vanguard is the biggest shareholder at 8.5%. State Street, BlackRock, Newport. Then you have a bunch of companies, Morgan Stanley, UBS, BNY, Invesco, William Ford, Barclays, Goldman Sachs, Merrill Lynch. They employ a lot of people, 181,000 in 2013, 177,000 currently. And the ticker trades in lots of places: the New York Stock Exchange, London Stock Exchange, Mexican Bolsa, Deutsche Börse, Swiss, Xetra, EuroTLX, Wiener Börse, Kazakhstan, Lima Bolsa, Colombia Bolsa, BATS Europe, Sao Paulo Bolsa, and Buenos Aires. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.